Let's welcome Christina and Chris from SoFi.
Okay, good morning. I'm Chris Brown. I'm SoFi's co-head of retail sales, along with my colleague, Christina Kramlich. Christina is going to walk you through some of the progress SoFi has made to date and also tell you about our investment products. Christina?
Hi there. Let's see. Well, I think we saw yesterday how far the industry's come in the last couple of years. We've gone from calling it pure peer-to-peer financing to kind of embracing the fact that institutions are going to play a part, as well as individual investors, in reshaping the online consumer finance industry. SoFi's bringing transparency and community to the student loan market, which we think is really ripe for disintermediation. At SoFi, we refinance the loans of graduated professionals, MBAs, doctors, lawyers, dentists, and engineers, for example, people who've graduated with an advanced degree but who are working in their chosen field and still burdened by the high price of student debt. Borrowers like us because we give them better rates and a better customer experience, as well as a host of other benefits. Investors, individuals as well as institutions, like us because we provide access to premium credit quality assets that perform like a fixed income alternative and don't default very frequently. Many investors also like the idea of investing in loans of grads from their school, so there's an affinity and community component. In less than 3 years, SoFi has become one of the top 3 online direct lenders that use peer-to-peer financing for access to capital. In addition to lower rates and a great customer experience, we offer borrowers a suite of other services, such as job search help. We've helped 28 people find jobs, mentorship, career coaching, events, and a selective entrepreneurship program that help them raise money for new ventures that they'd be unlikely to get from a traditional lender. SoFi is on track to be one of the largest student lenders in the country overall by the end of 2014. To accomplish this goal, we saw that it would be more efficient to engage institutional as well as alumni and individual investors to invest in the platform of super premium assets. We were able to bring both constituencies together in the first rated P2P securitization back in December of 2013. With several institutions taking the senior notes, retail investors filled in the residual equity in the transaction. The deal, $152 million of senior notes and $15 million in residual, got an A rating from DBRS and was oversubscribed. So far, our participating retail investors are on track to earn low double-digit returns, assuming performance continues to go as planned. As the company scales and our loan volume increases, we anticipate additional securitizations. Our goal is to increase basically the ability for our individual investors to access these transactions through conversion from our other individual investment products. So to that end, we've launched a suite of new investment products for our individual investors to participate in our platform. There's 2, a long-term and a short-term. And the first one is the 5-year community note. This one gives investors the experience of backing borrowers from their preferred school without conveying loan ownership, as our previous product did. The interest rate paid reflects the performance on the underlying loans in a given quarter. The notes will offer conversion into future securitizations that we anticipate completing. The short-term product, called the 1-week community note, will be out in about 60 to 90 days, we hope. The aim here is to meet investors' needs to balance yield and liquidity. We'll be making this product available to retail investors in every state, and non-accredited investors will be able to invest as well. We think this product will help us grow our individual investor base on our platform while they capture a fixed income-like return. So if you're interested in hearing more, please come to our booth and or go to our website, and we hope to see you there. Thank you. Back to you, Chris.
Thanks, Christina. All right, the conference is almost half over. You've been inundated with information, so I want to give you 5 key takeaways on SoFi. Number 1, SoFi is the fastest growing lender in the space. We fully expect to be number 2 in loan volume in 18 months. Number 2, we're very well capitalized with $140 million in net equity. 3, the quality of our borrowers is excellent. We're refinancing educational debt for the best of the best. We've had no defaults to date on our refi loans. 4, SoFi has excellent institutional relationships, which allow us to lower our cost of capital. And finally, as an alumni or retail investor, we put you first. Holders of our 5-year community notes are offered access to equity in future securitizations, potentially increasing your yield significantly. So please come and see us in our booth. We look forward to hearing from you. Thank you.
Anyone have any questions? The notes are not part of the securitization. No, the notes are convertible into future securitizations, but they're unsecured debt, essentially.
You can look at it as a holding vehicle. You don't have to hold the notes for 5 years. You can move into securitization anytime we do one.
If you could answer it.
Are we refining FELP? Usually FELP loans are really, I mean, yes, we are if they need to be, but usually FELP's not super high interest rate. What was the second question? I think we define default as 160 days, so it's pretty close. Yeah. Yes.
Just a little bit more about your mortgage product.
The mortgage is in pilot mode right now, so it's very small, but we anticipate growing it, once we get the kinks out. No.
No, single digits unlevered. Right, but through a securitization, you can bump that yield up. We can talk in more detail up at the booth.
Thanks so much. Appreciate your time today.
Thank you.